What I'm going to discuss with you guys, you will not find it anywhere. Even in those premium paid channels, you can't get that information. I bet this is the information that everybody would appreciate, and it is basically all about what is the right price to buy, what is the right price to get off from the market. So normally, if I talk about the cycle, it's all about emotions in the market. How do they react, and how does the market maker induce you guys to have those certain emotions? So as you can see on the chart, I have drawn an infinity symbol which has a support, or you can also say a resistance for the down cycle, a support for the upper cycle. So basically what happens, the market starts with the disbelief, as you may have already seen. So this is a price over time chart that you can see. It is a cycle, it is the process that each and every chart follows, even the new coins or the blue chip coins or even the stocks. So it is about emotions, how they react to, because if they don't induce these emotions, the market won't operate. They won't have new investors, they won't have the depressed investors to have faith in the market. Or to be precise, it is about how to get into the market and where to get out from the market. For a newbie, it is quite easy to fall into trap where normally the market induces you a certain hope where a rally goes up and then it retests a zone, and further it induces optimism where you actually get your head straight that I'm going to involve into this stock, or this stock is going up and it will have a good rally. At the excitement level, you are all in, whereas the person on the other side of the table, or you can say investors or market maker, they are actually selling you at these levels. They are not buying at these levels. They have already gained a lot stock here at the capitulation period, or you can say depression period, where so many people out of 100, you can say 80% of people normally lose their faith in the market. They normally guess it would go below to this level. They buy stuff here and then they sell it over here. The major stock they sell at excitement and exuberance period, or you can say a thrill level, where normally a newbie or a person who doesn't know much about cycles, they get into that period. And what they do, the newbies, they get a good fare when the market sells off immediately. As soon as retail investors normally enter into the market maker goes all in. They sell about almost 80% of the stock over this point. So the market goes down just to induce short retailers, and at the same point the market maker investors, they normally buy more stock just to have another go, so that they can trap more investors at the peak level of exuberance. And then the market goes down, denial period, where everybody thinks that market will go up. It is just a common retracement as it previously has been done. So what the common retailer would do is, like, they will start selling over this part while they have bought the stock at this point. On the other hand of the table, they normally start buying. They would buy at each level. And how would you know? I will show you that at a later stage. So they normally start buying 25% here, 25% here. They have almost around 3 to 4 legs that they put your stock in line so that they can buy. They induce you every time that the market would go up. Even at the bargaining, panic, anger is the last stage where they actually give you a hint that market may go up and you go all in. And then they close up your trades by falling down further. Then they are basically inducing people to buy everything at the previous high levels, so that when they go down 50% or more of the retailers, they do panic selling. And then from that place, when everybody is depressed and everybody is like losing their hope the market won't go up, the disbelief rally goes, and then again a small pullback where everybody would think, okay, as I thought, the market is just a sucker rally and then it will go down. At this stage, the market doesn't return back from that point. It goes up and up. Okay, so this was all about the emotions that you have to consider whenever you are buying a stock. For example, if you are having a fear the market would go down, that is the level where you need to buy the stocks. You can't catch the bottom of the price, you can't ever imagine where the bottom could be, even if you know the cycle, even if you know each and every emotion and you have a good control of it. You are basically targeting a cycle, and as soon as you see the bottom of the cycle you try to buy the stocks. As let's go back to our chart. So as I explained, there is a cycle. So this is our support or resistance. You can see normally we target previous high, and the cycle begins from there. It goes up and up and up, and then it goes down as well to create new bottom, and then it goes to the resistance where it basically has done its cycle. From that point they reconsider the options, they see how many retailers they have induced, liquidity, how much liquidity is upper side or the downside, then they decide what to do. If they don't have many uh, retailers to buy at this level, they would go a little down so that there could be a little faith in the market so that they don't go out of business. So if I show you on the chart, I do a horizontal line at the previous 2017's peak, and then another horizontal line at the 2019, 20, 21 peak at almost this level. And if I just adjust a little here, okay, so this shows that the market has completed one cycle somewhat at a bigger time scale, of course. Okay, so this is an infinity chart. So this was done previously, so this cycle is done. So what I'm targeting now is like for this one, as you can see from this 2017's bull run to 2019 bottom, if we draw a line here at about approximate to its midline. So if you check previous cycle, so this could be our midline if you notice it. So how can we judge this? Is there's a tool that I'll discuss later on. So for now we are just looking for a cycle. As soon as it finishes you are entering into a new one. Okay, so you can see a cycle moved up, it created a peak, and then it started going down, it touched the bottom, and then it went up again. So one cycle was completed there. As soon as they decide to go into one direction, they go to that one. Basically it is all about money. So wherever they see there is most money, they create a new cycle. But as soon as you notice that there is a cycle, you will see that if, for example, this middle line is broken, if it is this big cycle, it has to come down to complete this cycle, so which came down and then it went far. Once this cycle was completed, then it went to create new one. And as you can see, the cycle returned into our bull run. So how to see what cycle we are in? Basically you go into weekly or monthly chart that tells you that we are in a bull run or we are in a depression zone. That's why we discussed all those emotions. If we have a look at this one here, so if you see, normally we did multiple cycles here at about almost this level. Okay, so it went up, created one upper cycle, one down cycle, then upper cycle, and then down cycle. So two cycles were completed here. If this middle part is broken, it means it has to make a cycle, and then until it completes 2 cycles, we are stuck to that particular emotion range. For example, euphoria, panic, anger, depression. So this was a depression zone. This was our excitement, thrill, and this was complacency, panic, anger, depression, disbelief, until we complete that cycle. Okay, so far we completed 2 cycles. As soon as we saw that this was not broken, we could have gone for creating a new cycle. And how can we see that? We just create our highs and lows, support and resistances. That is quite common to see if we are here. And then this was our 2 cycles: upper side, downside, upside, downside, and then up. If it doesn't go up the second time, it has much bigger probability of going to next level of support, which is here, almost at here. If you go back, you will find our previous bull run 2017's peak that would act as a support. As soon as we fall down, it went to create a second cycle, another cycle from here. So normally what we are looking here is another of the cycles that could not break this level. And now what we are seeing here, it might come down to retest a level and then create another cycle, similarly like we did here, which means we are having another middle range here somewhere. Instead of going all the way down, we could go here firstly. It's all about probabilities. Unless until we see this depression zone at every level, like this cycle is completed now, it has completed another cycle where there is going to be an accumulation phase over here to break this part. So you can understand what I meant if I let you through all those emotions, why it is important to notice which emotion we are going through right now. It is apart from all those trading charts and patterns and everything else. So how this can be useful to us? Basically, we are going to draw each and every level, support and resistance, and then we are going to examine all those emotions at each level. And the quite understandable emotion is accumulation phase, or you can say depression. Normally we see every now and then where the market is stuck at particular level. So you have to see if we have completed the previous cycle or we are heading towards half completion of another cycle. So you have to judge that one. Apart from that, the volume can help you. If you look at the volume, it can tell you many things. If the volume is increasing, if decreasing, if it is weak bullish or weak bearish. So basically it is all about emotions and money. Where there is a money, they will induce another cycle, and every cycle at each level, even if it is a day time frame or 4 hours, they are basically creating such sort of emotions at every level. They induce traders and then they do the trade. So normally what I meant here for the newbies, if the market is going up, either you enter it early where there is a resistance and it breaks and it retests there, and then you need to enter there, or you don't enter at all, because at this stage you would know that at each level, for example at this range, the market needed to sell off or needed to cool down a little, and then any retailer would panic out and they would sell off their trades. So you enter it here or you don't enter at all. And this is just a stage that will induce you to enter, and then the market comes back. Then you would have a much greater panic emotion and you would sell it at a losing price. Similarly, if you recognize this stage on a daily time frame that it is a depressive state and it is consolidating, it is accumulating, it means the price has to go up, then you could enter here and not here, because it did not clarify whether it is consolidating or not. It was an hunch for you, and as soon as you entered here, you should get out at the maximum level where there is going to be another huge consolidation, where the market is going to prepare for a fallout. Simple as that. The larger area they cover for a reasonable time, and a bound price range where they are not breaking any highs, you should consider it to be your exit point. Similarly, where there is going to be a larger time scale price bound range, you should consider it buying when you see the previous highs are not yet reached and the lows are being claimed over and over again, and they are not breaking it now. So you should enter there. Similarly, as we passed on this range here, we should have entered somewhere there at the peak to go off selling. As soon as this breakdown our 25,000 area, we could consider another cycle to begin, and then we could ride it along. And just to let you know, there is going to be a fixed range volume profile to let you know that which is your point of center for your particular cycle. At each time frame they would be considered. You just have to take into notice which point to cover, from which range to which range. Your, for example, this was a range bound area, so FRB tool could have been from this range to this range. It could tell you what was your point of control, what was your value at high and value at low. As soon as it breaks either side, it could be a sell zone or buy zone. For this sort of knowledge, we have our Telegram channel. You just message me in my comment box, I'll let you know the link.